So I spoke with thousands of Aussies across the country about their money situation. Here's what I learned. This video is part 2. You can check out part 1 somewhere right here. Let's get into it. So as I was speaking with these people, a decent number of them had new forms of finance. What do I mean by that? Traditional finance includes stuff like credit cards, personal loans, and car loans, and these have been around for literally ages. New forms of finance are basically debt products, but they're pitched to you in a very new and exciting way. If you haven't figured it out yet, of course I'm talking about the good old Zip Pay, Afterpay, even Hum as well. At this point, I'm sure a lot of people have also taken out those interest-free credit cards from CBA and NAB, and even Westpac recently launched their interest-free card as well, which I've talked about on this channel. You can check out the video in description. Now, a lot of people are rushing towards these products because they're so much easier to get approved, and apparently 30% of Aussies have used them in the last 12 months, which is absolutely insane given that these products haven't even been around for that long. These products are often used instead of a credit card because the approval process is not as strict. And since a lot of these don't charge interest, they only charge those transaction fees, they're able to avoid regulation, and that's how they get by. Of course, these products are not fee-free. There are fees involved, but they don't charge interest specifically. Now, personally, I don't think these types of products are necessarily bad. They can be used in a proper way. For example, if you've got a large expense coming up, but you're also investing on the side, these types of products can allow you to smooth out that large purchase so you can buy the thing and also keep on investing as well. But obviously, most people aren't able to do this, therefore they fall into that buy now, pay later trap where they're basically afterpaying necessities and get into a debt cycle. So overall, products like these are not very good when you look at the big picture. A lot of banks take Afterpay and ZipPay as debt, so it can reduce your borrowing power as well. Now, I saw a tweet by The Australian the other day, and they said something like, FUPay, look at the name, will become the nation's first buy now, pay later provider to offer short-term loans for items such as milk, petrol, and bread at 3 major outlets, and I thought this is absolutely insane. This stuff has gone too far. Now, people are going to use services like these because oftentimes they really have no choice when you've got, low wage growth and you've got a lot of expenses, you've got kids and a lot of debt. You are going to succumb to using services like these, but stuff like this is absolutely not a solution. And it really just pains me to see this. Now, if you guys want me to make a full video about FUPay, let me know because these guys are literally effing you, and I can talk on and on about how bad this is. Most people had barely any HEX debt. Now, this is probably because a large proportion of people that I spoke with were 40 and above, so there's a big chance that they paid off their debt or they never went to uni in the first place. Plus, if you compare the university prices that are being charged now to students versus what they were 20 years ago, you can see that there is a huge difference. Plus, when you're 40 and above, you've been working for about 20 years at that point anyway. So for most people, you should be able to pay off that HEX debt in 20 years, I suppose. 95% of the people I spoke with understated their expenses, and I think this is huge. So as a broker, I had to ask the customer about their assets and liabilities, their income and expenses. And when it comes to expenses, banks usually have a 12-category list that the customers have to declare their expenses against. This list basically includes everything from groceries to insurance to subscriptions, literally anything under the sun. 99.9% of the times, people would under-declare their expenses, and I'm not sure why. Maybe they thought that under-declaring their expenses would allow them to borrow more, or maybe they quite simply had no idea how much they spend in a given month. I'm not too sure. I had families of 5, 2 adults, 3 children, talking about how much they spend on groceries, and they would often say that they spend $100 a week, which, to be honest, seems a bit sus. If you're super frugal and you can get by with $100 a week, then okay, it makes sense. But when you speak with many people, several people, and they say the same thing, it doesn't seem right. Sometimes I'd go through their statements, and that's where the truth comes out because statements don't lie. Quick note, if you do under-declare, the bank will go off of something called HEM instead. So they will apply a minimum expense to you in their calculations if you do under-declare, and also keep in mind that they may even ask for your statements to actually verify those expenses, and oftentimes the statements do turn out to be higher than what the customers actually declare, so they will go off of the higher amount, which will mean that your borrowing power may be lowered. Now, this goes hand in hand with my point in the previous video, which is the fact that people weren't budgeting, and as a result, what they spend versus what they think they spend, there's a huge discrepancy. So many people were scared to take action to, finally take the plunge when it came to refinancing or changing their financial position, and this just baffled me. I would speak to customers, give them the facts, and talk about how much money they could save every single week, every single month, in a given year and also over the life of the loan if they were to change their banks. Then I told them how quickly they could be mortgage free and how much they could save if they put the savings inside the mortgage every single month. But even with cold hard numbers, some people simply didn't want to go ahead. In reality, it would take them a few hours to get all the paperwork, all the documents, have a chat with me and get all that stuff together. But the actual ROI on the couple of hours of work could literally save them thousands and thousands of dollars. Think about it. If you spend 3 to 4 hours having a chat with a mortgage broker, getting the docs, doing all that stuff, those 3 to 4 hours could literally save you tens of thousands of dollars. When you look at it like that, it seems like an absolute no-brainer, but oftentimes people don't really think of it like that. And it just kind of sucks because they could have saved so much money. And I think it's so interesting that oftentimes we are so concerned with cutting back on expenses. We're trying to save $5 on coffee every day, but we completely ignore the big things which can really move the needle. And I think this is very important. A fair few amount of people had no idea how fixed rates or variable rates work, what a split loan is, or how an offset account works. Of course, they knew what they were, but they didn't know the implications of choosing a fixed rate or a variable rate, what the benefits or the disadvantages are of choosing each option. Now, in my opinion, this is pretty understandable. You don't really learn these things in school, and unless you're working in finance or banking, you don't actively consume this sort of information unless you're really looking into it. So it's pretty understandable, and I don't really, look down upon these people for not knowing. Of course, it's the broker's job to educate the customer, which is why I always made sure that I explained all the rates and all the implications of everything if they were to choose it, and hopefully they got some value out of that. By the way, if you're watching this video and you're still not sure about what the difference is between fixed, variable, split loans, offset accounts, check out this video right here. I'll leave a link in the description as well. It'll help you quite a bit, I promise. Something which was quite amazing is the fact that people were fairly switched on in terms of getting the best rate possible. These people were actively shopping around, trying to speak with multiple brokers, multiple banks, and trying to get the best deal. And it's really good to see that people were taking this sort of stuff seriously. In fact, about 50% of all home loans go through a broker rather than going direct to a bank. Now, this actually made my job a lot harder because I had to actively try and fight for their business and really try to sell myself and outline the value that I create. But if I look back at it now and I put myself in the customer's shoes, to be honest, I'll be doing the exact same thing. I'll be looking out for my own interests. I'll be speaking with multiple brokers, trying to get the best deal. So I don't really blame the customers for doing what they did. But at the time though, it was very annoying because I had targets to hit and whatnot, but doesn't matter, it's all about the customer. Now, because people were so picky about the rates, they didn't take into account all the other factors you have to consider when choosing a bank. For example, you might like going into a branch in 2022. More power to you. There's many lenders out there that don't actually have physical branches, they only operate online. So if you're only looking for the best rate, you might find these online lenders, but they may not have the branch access that you're also looking for. Similarly, a customer may have just joined their job like a week ago, or maybe they're working casual for only a couple of months, or maybe they're even new to the industry itself. Now, not all banks can accept this, some can, but not all. It's the broker's job to find the best rate for the bank, but also find the bank that fits the customer's situation. And if you're the customer, you're only caring about the best rate possible, so you might choose a bank that doesn't accept your situation, which is why it's so important to speak with a broker and find the optimal solution for yourself where the bank can give you a good rate, but also accept your overall situation. So this education piece is what was missing in a lot of customers that I spoke with. So oftentimes we had to speak about why the cheapest rate may not be the best rate for their situation and so on. Lastly, in all of my experience, I have spoken to 1 or 2 customers that actually own crypto. In my previous video, I said something similar about stocks. Most people I spoke with wanted to build wealth using property and they barely had anything in stocks, but when it comes to crypto, they had even less in crypto than they had in stocks, which was very interesting. Now, this was a few years ago, so I'm sure a lot of people now have adopted cryptocurrency in terms of their trading, investing, or staking or whatever. So it'll be interesting to see how many people have jumped onto this crypto bandwagon. If you enjoyed this video and you haven't seen part 1, check it out right here. And guys, thank you for watching. Please like and subscribe, and I'll see you in the next one. Bye now. While keep on